Welcome everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Peter, thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So tell us, what's driving the markets today?
So actually there are worries in the market, extensive worries about a possible economic slowdown not only in the US but also globally. It's characteristic that there are a number of issues which seem to intensify these worries. Say, for example, the rise of inflation, the tightening of monetary policy, not only in the US but globally. Also, I would highlight the war in Ukraine, which is still ongoing and creates difficulties in the recovery of the global economy, as well as supply chain issues, which are still present and are also practically having an adverse effect on the recovery of the US and the global economy, once again. Overall, we would like to note that these market worries may intensify further should these issues not be resolved swiftly. It's understandable that monetary policy tightening could have a substantial adverse effect on global growth because we are talking about monetary policy tightening around the world. It's not only in the US. And that could more or less create some difficulties in the growth as the markets will be drained out of cash and there will be less and less opportunities for growth and for business. On second note, another headline that caught our attention would be practically that US President Biden may be visiting Saudi Arabia. In a period where oil prices are very high, it's expected that there will be some negotiations also about oil prices and the production levels of oil, as well as for natural gas prices and production levels. Please note that in the US right now, the US government is being substantially criticized about the high level of gas prices. On the flip side, there is a catch here. The catch is that practically the US president in the past, around 2018, had blamed Mohammed bin Salman, the crown prince of Saudi Arabia, for the murder of an American journalist. And that creates a twist in the whole visit, as it practically may create some ice between the two leaders. That should be it about it.
Okay. How about the USD? Was on the rise yesterday?
Yeah, the US dollar was on the rise yesterday. High yields tended to support the US dollar. It would be also the fact that more or less we had a US dollar which tended to gain on safe havens, and monetary policy outlook differentials seem to favor the greenback right now. It was characteristic that James Bullard, St. Louis Fed president, yesterday stated practically that the ongoing tightening of the monetary policy is a must-go for the Fed. More or less 50 basis points rate hikes sound like a good plan to raise interest rates over the coming months. So we would expect practically the Fed to continue on this rate hiking path. We have to note here that a possible pause around September could occur. But overall, the direction is set, and definitely the Fed's going to be tightening its monetary policy.
Okay, great. And how about the US stock markets?
US stock markets dropped, and it was characteristic that all three main US stock market indexes, the Dow Jones, S&P 500, as well as NASDAQ, were in the reds. We have to note that investors practically are substantially worried about the draining of the market from cash. It would be noted that the Fed's plans to reduce its balance sheet, and we're speaking about a $9 trillion US balance sheet, with plans in the current month to start reducing it by $45 billion US, more or less tended to rattle investors, and a more cautious sentiment tended to surface in the markets. That had an adverse effect on the US stock markets. We want to see how the market will open today. There are still dividends releases which could excite traders. So that's a parameter which should be kept in mind. The Asian session, Asian markets more or less were in the reds. The Europeans have started and seem to be wobbling. We would like to see how the American Open goes and to see how the US stock markets will move. Should the cautious sentiment continue, we may see US stock markets maintaining their drop and practically maintain a bearish sentiment.
Okay, interesting. Was at least gold on the rise?
Yeah, and that's despite gold having an adverse relationship, a negative correlation with the US dollar. Note that the US dollar and gold both rose, and that was indicative of the uncertainty in the markets. It should also be noted that it wasn't not only US dollar that rose, also US yields seem to be on the rise, and under any given other relationship, I would be highlighting that the non-interest bearing precious metal should have dropped. It didn't. Instead, it rose. Once again, though, I would like to see how gold will behave today, as should the US dollar actually continue to strengthen and US yields continue to rise, we may see gold's price retreating somewhat.
Okay. On the north side of the border, the CAD failed to strengthen against the USD, right?
Yeah. And we had a loonie which actually initially the CAD got some support from Bank of Canada's interest rate decision. The bank had practically hiked rates by 50 basis points, and that was a plus. Also, another plus was that the bank sounded confident and warned that there will be more rate hikes to come in the following months. All of that tended to provide some support for the loonie at the beginning. However, later on, the market sentiment turned more cautious, and the Canadian dollar as a commodity currency tends to be quite sensitive to the market sentiment. So that tended to weaken the loonie. Also, the weakening of oil prices, given that Canada is a major oil producing country, tended to weaken the CAD as well.
Okay. And there is to be an OPEC meeting today, isn't it? Any comments?
Yeah, the OPEC meeting is going to be through a teleconference practically. Now, the big question here is A, the production levels of oil for the oil producing bloc. It's expected to announce more or less a hike of production levels at the rate of 423,000 barrels per day. Now, the production hike as such, should it actually be announced, would be low, would be meager, and it may not be sufficient to actually quench the thirst of the market for oil. There is a catch here, and it's a big catch. The catch is that the Saudis, as well as a number of Gulf countries, seem to have reached a level of capacity which is at the max. Saudi Arabia right now is reported to produce around 10.5 million barrels per day. Now, production seldomly exceeded 11.5 million barrels per day. So we may see the production, the spare capacity for production of oil of the Saudis being strained. And there may be difficulties in actually achieving higher production levels. On the flip side, we have another issue. There are reports that OPEC is considering suspending Russia from its oil production quotas. And that would mean practically that Russia would be free to increase production levels as it wants, depending on which customer it finds, given also the European ban of imports of Russian oil. On the other hand, though, we may see other member states of OPEC jumping onto the opportunity and increasing production themselves. So that's something which could direct oil prices both ways, depending on where the heavyweight will be of the announcement.
Okay. And how about the pound?
the pound. The pound had weakened against the US dollar, has weakened against the euro, has weakened also against JPY. So we have a broader weakness of the pound right now. It should be noted that more or less there is some kind of political instability in the UK, given the scandal of Partygate. The UK government, and actually UK Prime Minister Johnson, announced that he will not be resigning over Partygate. And that was some kind of reassurance, but a rebellion within the UK Parliament from party members and party parliamentarians of Johnson seemed to be building up. And that could create substantial uncertainty in the UK political scene. There are some political analysts which cite also the possibility of snap elections in the UK should the Tories actually rebel against Johnson. And that would be a big issue. On the economic front, worries about the UK economic outlook are intensifying. We have a slowdown of economic activity. We have a rise of prices, high inflation. And all of that combined with Bank of England's tightening of its monetary policy tend to intensify worries about the possible stagflation effect in the UK economy, where we have practically high prices and low productivity, low GDP, which more or less would be a nightmare for Bank of England in the UK economy. It would be very difficult to get out of. They wanted to avoid this scenario, and it's coming right at them. That should be it. So more or less, I don't see another way for the pound right now, possibly dropping even a little bit further. Despite we have to note that the pound today in the European session, at least as we're talking, tended to get some support.
Okay.
So there may be a correction higher here. We have to see whether that's just a correction or whether pound traders regain their confidence.
Okay, let's move across the channel. What's the euro doing?
Well, the euro on the flip side, in contrast to the pound, say, for example, strengthened. Okay, it lost against the US dollar, definitely. That was the main market move yesterday, the strengthening of the USD. But the euro gained at least against the pound and JPY. So there is some confidence among euro traders. I would be highlighting practically ECB board member Lane's comments that were made yesterday. And he practically mentioned that the bank will validate with the tightening of its monetary policy also the tightening in financial markets. So overall, we see ECB policymakers making statements about a policy tightening coming, most probably discussing about rate hikes in July and September, not next week. At least that's the main sentiment. And there is also a gradual approach. It's not like they're racing towards hiking rates, but they're trying to keep it slow, steady, and not so much on a fast pace. Not a panic mode.
Great. Thank you, Peter, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So hello, welcome to the technical analysis part. Now we make a start with the US dollar. And what you can see on your screens is USD indexes for our chart. We can see how practically, let me readjust this before we make a start. There we go. Now the price action moved higher, abruptly higher. and corrected lower during today's European session. Nevertheless, there seems to be an upward trend line forming, which could create some bullish tendencies for the US dollar. However, we have to switch also the R1 as it has been broken. We'll do this right now, turning red into green. And the new resistance line will be at 104.90, 105. So let's readjust, and the S3 becomes the 99.80. The S2 will be the 101.30. The S1 will be the 102.05. Stabilize this. First resistance line now is the 102.90. However, yesterday's peak actually could lower it. Let's correct this. There you go. $102.75. Resting practically on yesterday's peak. 102.90 remains. Now turns to 103. Let's have a look. 95. And the last resistance line being placed at 105. So we have an upward movement, which practically has started to define a slight upward trend line. There was a correction lower that was during today's European session. It was a substantial correction lower, actually. And the price action is now threatening the pre-mentioned upward trend line. Should it be broken, then we would switch our bullish outlook in favor of a sideways bias between the 102.75 and the 102.05. If it's being followed and the bulls take over, we would expect the price action of the index to break above the 102.75 and start aiming for the 103.95. However, we may have a medium level right here. Sorry about that. That would be around the 103.25. So take notice of this as well. And that's being followed by the 105 resistance line as an ultimate target for the bulls. To the downside, for the outlook to switch in favor of a bearish side, we would require a clear breaking of the upward trend line, breaking of the 102.05, and the price action of the index to start aiming for the 101.30, which provided substantial support around the 31st of May. In which case we may see the price action starting to move even lower for the 99.8. It's an extreme bearish scenario, I know. However, that's the lowest we can go, given also that the chart has that as the lowest point in the price action. It's a beautiful chart, and it's quite interesting what's going to be happening here. Let's have a look at Euro USD. Now, Euro USD dropped. That was yesterday's late American. If not today's Asian session, let me check it out. No, it was in yesterday's American session, as the US dollar got some substantial support. So the euro followed lower. Nevertheless, during today's European session, once again, there seems to be some correction higher, as the US dollar seems to be weakening and the euro follows. Overall, we tend to maintain a bias for a sideways motion. There we go. That's between the 1.0740 and the 1.0605. For the sideways bias to change, we would require a clear breaking of the R1 1.0740 or the S1 1.0605 to either direction. Should the bulls take over, we definitely expect the R1 to be broken and for the pair to start aiming for the 1.0935 to the downside. And should the S1 be broken, we may see the pair start aiming for the 1.0480, which provided support here. However, it's more obvious here and here. It was the lower boundary of the past sideways movement for the pair at that period. That would be around the 28th of April until the 10th of May. Now, the Rsi indicator is still below the reading of 50, but rising. It's approaching the reading of 50 as such. And should the sideways momentum be maintained, we may see it running along the reading of 50, confirming a rather indecisive market. Other than that, there may be some widening of the Bollinger Bands here, but still we see that the price action revolves around the current price level, which is at around 1.0680 something. Let's have a look at NZD USD. Actually, before that, let's have a look at the pound and cable. In a similar downward movement, cable dropped yesterday in the open of the American session. Nevertheless, during today's European session has corrected higher and has broken above the 1.25. However, yesterday's movement practically underscores a new support line somewhere here. You can see there was a support line here as well, and here. So that would be around 1.2470. Lower than that, and should the sideways movement be broken to the bearish side, to the downside, we may see the price action starting to aim for the 1.23, providing support here. And even lower than that, we have the lowest level in our chart. That would be the 1.2165 as the S3, which provided support around the 12th to the 13th of May, and was actually able to reverse the downward motion of the pair in that period. Now to the upside, and should the price action actually break the 1.2610, we may see it approaching for the 1.2775, which tend to provide some resistance here. Even higher would be the 1.2965. However, that's an extreme bullish scenario right now. Note the Rsi indicator, which is as in Euro USD below 50, but slowly approaching that level. And should the price action stabilize, we would expect it to practically run along the reading of 50 once again, implying a rather indecisive market for the pair. Let's have a look now but Usdjpy. So Usdjpy had a beautiful touch. Let me readjust the positions here. There you go. We can see how the pair actually respected the 130.25, was not able to break it. Yet for a bullish outlook to change in favor of a sideways movement, we would like to see a clear breaking of the upward trend line guiding the pair since the 30th of May, and that hasn't happened yet. So we tend to maintain our bullish outlook for now. However, we tend to also note the possibility of the price action actually moving lower and breaking the upward trend line, in which case we would switch our bullish outlook in favor of a bias for a sideways movement. On the other hand, we note that the Rsi indicator had broken above the reading of 70, signaling that the pair had reached overbought positions and was ripe for correction lower. So the correction here is understandable, and for the time being it should be treated as a correction only. And once again, we would require clear breaking of the upward trend line to switch our view on this. Other than that, should the bullish sentiment be maintained, we may see the price action bouncing on the upward trend line, breaking the 130.25, which provided resistance once and twice here, so it's well respected. Higher than that would be the 131.35, which was providing resistance here and was aimed for here. As an ultimate target for the bulls would be the 132.80. And to the downside, should the bear say enough is enough, take over, guide the pair, we would require practically to switch our bullish outlook in favor of a bearish one for the price action to break A, the pre-mentioned upward trend line, break clearly the 128.85 support line, and start aiming for the 127.55. Now, we mentioned already the S1, 128 or 85, providing support here and here, and resistance here and here. To the downside, we also note the 127.55, providing some support here and here. Also another brief touch here. And below the 127.55, the S2, the second support line, we also note the 126.80 support level, the S3, which is also the lowest level practically in the price action in our chart and provided substantial support around the 25th, 24th, 25th of May until the 26th, 27th. So we would be highlighting the S3 as a well-respected support line or level by traders. Once again, the RSI indicator is above the reading of 70 but dropping, signaling the correction. We would require the index to actually start aiming for the reading of 50 before making any decisions, once again, about the bulls leaving Usdjpy. That does not seem to be the case, but the bulls seem to be losing steam, and that should not be underestimated. It's also characteristic that the rise of the pair seems to have caused a reversal of the 100 moving average and also a rise of the 200 moving average. That's how intense it was. Also note the Bollinger Bands. Stiff upward movement here, the median, as well as the lower Bollinger Band. Let's have a look at AUD-USD. There we go. A tight range-bound movement despite a rise of the pair that was yesterday as the US dollar more or less weakened and at the same moment, or a bit later to be more exact, strengthened in the American session, driving the pair lower once again below the 0.72 resistance line. So we tend to maintain our bias for a sideways movement between the 0.7125, which in today's European session the pair actually aimed for. And at the same time, we also note the R1 as the upper boundary of the sideways movement, which is the 0.72. Should the 0.72 actually be broken, clearly broken, we may see the pair approaching the 0.7265 resistance line, which provided substantial resistance. And note how it was able to reverse the intense upward movement of the pair. That was around the 4th of May. And the price action tumbled in the following days to drop as low as around the 1.6968. Higher than that, we note the 0.7340, which used to be a support line, and given that the price action has moved below it, has now been turned to a resistance line. To the downside, and should the bears take over, which is a possibility, we may see the pair actually breaking the 0.7125, which provided resistance here, here, and here, and support here. And should the S1 0.7125 be broken, clearly be broken, practically the way opens for the pair to approach the 0.7030 support line. That's the S2, which provided support here, resistance here, and support once again here. As the ultimate target for the bears for the time being, we maintain our sights on the 0.6950, the S3, which provided support here. So that should validate the level. Lower than that, we may see once again the pair aiming for the 0.6830 area. But that's too extreme in our opinion. Most probably for the time being, it's going to be maintaining a price action between the 0.72 and the 0.7125. And depending on which side it will break, because at some point it will break, one of the two, that's the new direction most probably. Should the 0.72 be broken, we may be talking about a bullish direction for the pair. On the flip side, should the 0.7125 be broken, we may be talking about a bearish outlook for the pair. It's interesting also how the RSI indicator below the 4-hour chart touched the reading of 50. That was yesterday. Also note how the Bollinger Bands have narrowed, which tended to imply practically that the volatility for the pair dropped a little bit and seemed to have stabilized somewhat. It's actually now testing the 0.72 as it did a couple of times in the past. So for the time being, I wouldn't be worried. I wouldn't actually be worried even if it breaks just above it. I would like to see a clear breaking and consecutive higher highs and higher lows as the pair aims for 0.7265 to switch our bias for a sideways movement in favor of bullish outlook. Let's have a look now at USDCHF. Now USDCHF, let me readjust this. As we had expected, maintained a sideways motion between the 0.9640 resistance line, the R1, and the 0.9550. Actually, it was closer to the R1 rather than the S1. So we tend to maintain our bias for sideways motion as long as the price action remains between those boundaries. A slight strengthening of the CHF during today's European session may have been also a result of the acceleration of the CPI rates in Switzerland. Unexpectedly, the CPI rates in Switzerland reached 2.9% year on year, which was higher than market's expectations of 2.6. So that could have contributed as well to a slight strengthening of the CHF, given also the weakening of the US dollar during today's European session. To the upside, and should the bulls take over, we may see the price action initially breaking the 0.9640, which it respected a couple of times in the past day, as well as around the 25th, 26th of May as a resistance line. Higher than that, we note the 0.9760, which provided resistance around the 20th to the 24th of May here, and around the 27th to the 28th of April here. Higher than that, we also note the 0.9875. Let me readjust this, as it was a resistance line here and here, and also provided support here. So it was well noted by traders on both sides of the aisle, and seems to maintain its validity, but we will see that when the price action actually nears it. To the downside, and should the bears take over, the possibility of CHF strengthening substantially, say for example, we may see 0.9550 being approached by USD CHF, be broken, clearly be broken, and the pair starts aiming for 0.9410, which provided some support around the midst of April. Lower than that, we also note the 0.9285. The Rsi indicator seems to be revolving around the 50 level, once again supporting the notion of a sideways movement for the pair. And it's characteristic that the range-bound movement of the pair since around the 25th of May has been pretty tight. Once again, the narrowing of the Bollinger Bands and the nearing of the two averages, the 100 moving average and the 200 moving average, tend to imply some stabilization. Let's have a look now at USD CAD. We'll magnify this. There we go. USD CAD dropped, broke the downward trend line though, which was guiding it, and seems to have stabilized. We have mentioned the possibility of a stabilization of the pair between the 1.2685 and the 1.2630. That seems to be the case right now. It's interesting how the pair actually broke the lower boundary, as BOC's interest rate decision was quite hawkish with a double rate hike. But the market sentiment turned more cautious, practically causing the pair to rise once again as it supported the US dollar, and at the same time tended to weaken the CAD, as a commodity currency is also most sensitive to the market sentiment. We tend to maintain our bias for a sideways motion between the 1.2685 and the 1.2630. Nevertheless, to the upside, and should the pair find fresh buying orders along its path, we may see the price action actually breaking above the 1.2685, which provided resistance here and here, and start aiming for the 1.2755, which used to be a support line. However, has now been reversed to a resistance line, given that the price action is below it. Higher than that, we also note the 1.2850, which was tested a number of times, a number of occasions in the past 1 month, since the beginning of May. Actually, it started around the 27th of April and was tested a couple of times in the near past. To the downside, and should the bears take over, we may require a clear breaking of the 1.2630 support line before switching our bias for a sideways motion in favor of a bearish outlook for the pair. And should the price action actually break below it, clearly break below it, and start aiming, if not even testing, the 1.2565, we would still hesitate. Nevertheless, the 1.2565 provided substantial support here, while even lower in an extreme bearish scenario for the pair, we may see the price action actually aiming for the 1.2465, which is also the lowest level of our chart, maybe a little bit lower at 1.2460, but the area is still valid and should be taken notice of. Once again, the tightening of the price action of volatility is, I wouldn't say evident, but still present. It's characteristic that the Bollinger Bands are converging, the upper and the lower Bollinger Bands are converging. At the same time, we would like to note that the range-bound movement is pretty tight between the 1.2685 and the 1.2630. Let's have a look at NZD-USD, the Kiwi. NZD-USD, well, that's interesting. Now, for the time being, we have a price action which has broken the upward trend line guiding the pair since the 16th of May. And the upward movement was broken practically on the 31st of May, the day before yesterday. There is a small catch though, which I'm not so certain. For the time being, it seems to be respecting the support line at 0.6475, the S1. And that may be forcing the price action to a sideways movement between the 0.6555 and the 0.6475. But the pair seems to have started to mark lower highs and lower lows. So a downward trend line may have started to form. Let's drill into the 1 hour chart for a better look. Could be it, could not be it. It's quite uncertain. But nevertheless, look, this is the 1 hour chart, as we have noted, of NZD-USD. Note how the pair is marking one low. The second low, true, is lower. The third, even a bit lower. The fourth, even lower. The fifth, lower again. On the other hand, we have highs. One. The second is lower. The third is lower. It jumps back up, but corrects straight down lower. And we have the final peak, which is also lower. So I would treat this as a false break. So there seem to be some bearish tendencies here, which should not be underestimated. But the RSI indicator in the 4 hour chart rose and has reached the level of 50, which tends to imply some stabilization, and definitely the bears are losing momentum. So I wouldn't be so quick as to call in the bears. It's also characteristic if we actually draw. There you go. So we may be seeing the RSI also pointing towards a bearish movement. I would like to wait and see. Nevertheless, for our bias for a sideways movement to be broken, we would require a clear breaking of the 0.6475. If the temporary downward trend line is being broken, that would be maintaining practically our bias for a sideways movement between the 0.6555 and the 0.6475. On the other hand, a breaking of the pre-mentioned downward trend line could be just shifting the downward trend line higher and to the right. So that's not clear either. I would maintain a bias for a sideways movement. However, there may be some bearish tendencies which should not take by surprise traders, at least for now. Should the price action actually break the 0.6475, once again, we would be highlighting the 0.6420 as a possible middle stage, which provided support here and here. But also lower than that, we note the 0.6365, with supports here and resistance here. and here. And lower than that would be the 0.6290. To the upside, and should the bulls take over, we would expect the pre-mentioned downward trend line to be clearly broken. Definitely, we would require clear breaking of the upper boundary of the current sideways movement, being the 0.6555, which provided resistance here, here, and support here. So it's well respected on both sides of the aisle. Once again, should the price action break above the 0.6555, we may see the way being paved for the R2, 0.6645, which provided resistance beautifully here. And higher than that would be the 0.6715, which provided support here and has now been turned into a resistance line. It's a very nice chart, a very interesting chart, and it's very interesting of what's about to happen. Let's have a look now at USDTY. Okay, there's a slight rise just above the 1640, but overall the sideways movement with the price action revolving around the 16.40 is still present. So that's something which tends to maintain, for in our view, a sideways movement, but USDTY is able to make abrupt movements to either direction. In this case, though, given also that the Rsi indicator is clearly above the reading of 50 and actually nearer to the reading of 70, which tends to underscore the bullish sentiment right now, given the weakening of the TRY. It's characteristic that despite the USD weakening in today's European session, USDTY still moved higher. So the weakening on the TRY side is even greater. Once again, we have conflicting pressures on the price action. We tend to maintain a bias for sideways movement near the 16.40 for now. However, we would like to make a warning about the possibility of the bulls taking over and for the price action to start actively aiming for the 17 resistance line, while even a little higher we note the 17.60. I would like to have a look though. That's it. Let's have a look at the touches once again for our chart. There you go. Once, twice. Should be clear on the 1 hour chart. Okay, that's the current price action right here in the 1 hour chart. Once again, bias for sideways movement present, but take notice of the bulls. They may take over and drive the pair higher, especially given the Rsi indicator. Note how the price action has actually reached the upper Bollinger Band, which is keeping it under pressure right now. It doesn't allow the price action to move higher. We'll have to wait and see here. There you go. Let's have a look at gold. Oh, XAU USD for our chart has definitely broken the downward movement it had the day before yesterday. And that happened yesterday in the late European session. Note how the price action continued to rise during today's European session. And it's interesting on two reasons. A, yesterday we had a simultaneous rise of gold's price and the US dollars. Usually the two instruments have a negative correlation, and forex bibliography tends to highly reference that negative correlation. Today it should be more understandable, I mean the rise of gold's price, given also that the US dollar had weakened a little bit in the European session. So I wouldn't be surprised to see the price action of gold moving upwards. Nevertheless, for the time being, we tend to maintain a clear bias for sideways movement between the, let me have a look at this, 1833 and the 1870. But it would be a nice occasion to correct the levels. Give me a sec. No, that's too near to the price action. I wouldn't trust this. Gold can break this easily. Let's widen it. Yeah, it's a nice prior support line, which also served as a resistance line. Oh, multiple touches. That's nice. We're definitely going to be marking this at 1937. Yeah, but let's do it in red. Now this turns from a resistance line, which provided resistance here, now to a support line, tested, touched, turns green. This is now a valid S1 support line and forms the lower boundary of our sideways movement. The S1, the S3, now 1787. The S2 will be the 1807. The S1, the first resistance support line, will be the 1833. Let's readjust also the resistance lines. With the R1 being the 1870. Beautiful touch here. And there's a support line here. Higher than that would be the 1903. I would like to mark though another one. And that would be around 1990. No, sorry, 1919, 1920. Let's have a look. There we go. Yeah, 1920. And we note also the 1903, which used to be a support line, has also though provided resistance in the past. We've seen the touches. They were actually pretty good touches. So it should not be underestimated. Once again, bias for sideways movement between the 1833 and the 1870. Note the Rsi indicator, which seems to be breaking from the reading of 50, starting to aim for the reading of 70, implying some bullish movement here. Should the bulls actually be broken and for our sideways bias to change in favor of a bullish sentiment, we would though require a clear breaking of the 1870 and start aiming for the 1903, which provided resistance here. Higher than the 1903, we note the 1920, and even higher would be the 1937. To the downside, And should the bear say enough is enough and take over, selling interest is being expressed, say for example, we may see the price action. Actually, we would require gold's price action to break below the 1833, the price support line, once, twice, 3 times, and start aiming for the 18.07, maybe even testing it, which provide support here. Even lower than that would be the 1787, which is also the lowest point of the price action for gold against the US dollar in our chart. Note this is the 4-hour chart of XAU-USD. Let's have a look also at WTI. Now we've discussed lots and lots about the fundamentals of WTI. Let's have a look at the technicals. Now it's interesting how the price action actually dropped yesterday, breaking the 115.80 support line, and that was practically on the 31st of May, the day before yesterday, in the American session, as also US media started reporting that OPEC may be suspending Russia from the production quotas, which tended to increase expectations of the market for a faster and higher supply of oil in the oil market. Same fundamentals drove the price of oil even lower today during the Asian session. Let's have a look. Yep, that was around 1 o'clock, 2 o'clock Cyprus time, so we're talking about the Asian session. However, we would have to switch the support line now into resistance line as it has been broken. Let's readjust this. $118.50, the highest level in our chart. However, if we move even more backwards, we will discover even higher points. Some points at 126.50, 196.5. The second resistance line would be the 115.80. Note the beautiful touch here. Lower, the R1 would be the 113. Even lower, the first support line would be at 110. However, that could be corrected a little bit higher, somewhere here, where we have one touch and another touch here, and that would be around 110.30. Even lower, we have the S2. But to tell you the truth, I would like to see a support line somewhere here. See the touches? The aiming. And on the other hand, we had some resistance here. I would be marking this level. I wouldn't leave it out of hand. And that would be around 107.70. And the lowest level would be at 104. Would be a bit higher. We have touches as a resistance line here, here, here. So I wouldn't actually dismiss this level. I would keep this as well. Let's green this up. And it's being placed at 105. Now let's make the analysis. We have a downward motion for the commodities price. Let's clear these past lines. Delete. Delete. Note how the commodities price actually marks lower highs, 1, 2, 3. At the same time marks lower lows, 1, 2. So the bearish trend line is present and valid. Should the the bears actually maintain control over the commodities price, we may see it breaking the 113.30 as a first stop. Lower than that, we have the 107.70, and even lower, we have the 105 actually. So that should sum it up for the day. Tomorrow we may be discussing also US stock markets, a couple of indexes would be nice. For more of us here at IronFX, best wishes for solid trading.
Hello, everyone. We are here with Odysseas, one of our account managers at IronFX. Hello, Odysseas. Thank you for joining us today.
Hello, Marilena. Hello, everyone. Thank you for having me. Well, we will be here once a week, basically, discussing different benefits that we offer to our clients. And today we will be introducing the bonus scheme we offer to our clients, with Marilena, of course, asking some key questions. Marilena, please feel free to ask anything that you would like to know.
Great. So tell us, what are the bonus schemes that IronFX offers to our clients?
Yeah, of course. So to begin with, let me just share my screen with you guys so you can be able to see as well what I'm seeing.
Mm-hmm.
Very nice. So let's start with, there are three bonus schemes that the company offers to clients. Now we have the 20% iron bonus. We have the 40% power bonus, and we have the 100% ultimated sharing bonus. So these are the three bonus schemes that the company here offers to clients.
Great. Very nice. Are there any requirements for clients to be able to select a bonus scheme?
Yeah, well, there are only requirements regarding the 40% power bonus, which is basically just a minimum deposit of €500, and the iron bonus and the ultimate bonus have absolutely no other requirements for a client to activate them.
Okay. Can you please analyze the bonus scheme for us?
Yeah, of course. So, for example, if you select the 20% iron bonus, once you make a deposit, for example, of €250, then a bonus of €50 will be added into your trading account, right? So, if you deposit €5,000, a bonus of €1,000 will be into your trading account. Now, the maximum bonus that you can receive on this bonus scheme is 2,000, right? For example, even if you deposit 20,000 into your account, you will still receive up to 2,000 as a bonus with the 20% iron bonus scheme. Now, this is for the 20% iron bonus. Now, we have also the 40% power bonus, which is the exact same thing basically, but the maximum bonus that you can receive is up to 4,000. So even if you deposit 50,000, then you will receive a maximum bonus of 4,000 into your account. And last but not least, of course, we have the 100% ultimate sharing bonus. We can see it here. Now, this bonus scheme has no limitations, right? So basically, no limitations, meaning, for example, if you deposit €1,000 into your account, then you'll receive €1,000 as a bonus, right? If you deposit €5,000 into your account, you'll receive €5,000. And of course, if you deposit 100,000 into your account, you'll receive 100,000 as a bonus into your account. So this is the 100% ultimate sharing bonus. So these are the three bonus structures that we have with the company for clients to select.
Okay. Is there something that you would like to add regarding our bonus scheme?
Yes, of course. And thanks for asking. Well, whenever you make a withdrawal from your trading account, the bonus will be deducted proportionally with the withdrawal, regardless the profit or loss. Right? For example, you are 100% to make sharing bonus.
Mm-hmm.
And you decide that you want to request a withdrawal of 1,000 euros, let's say. Now, 1,000 euros will be also deducted from your from the bonus that you initially received.
Okay. Last but not least, which scheme is the most popular?
Well, of course, that will be the 100% ultimate sharing bonus. No doubt in it. There's a reason for it, Marilena, of course. I mean, with the 100% ultimate sharing bonus, you have much more buying power into your account.
Mm-hmm.
For example, when there is more money into an account, there is more buying power, right? When there is more money in the account and there is more buying power for the trader, then the trader can be much more flexible with trades, and he can grab onto opportunities much more oftenly.
Mm-hmm.
For example, it's different having an account of 1,000 and it's different having an account of 2,000, or even if we take it into a different amount, it's different having an account of 10,000 and it's a lot different having an account of 20,000. So this is where the 100% bonus scheme comes in, regarding the buying power, which makes a lot of traders much more flexible into trading and looking into more opportunities, of course.
Great. Thank you, Rsi, and everyone for watching. Join us after a short break for a website walkthrough with Emily from Affiliates Department.
Thank you.
Hello everyone, my name is Emily and welcome to another short walkthrough of our website. Today I'll be showing you a little bit about our partnership programs. So let's get started. As you can see here, this is our home page and I want us to go right here where it says partners. So last time I said that it's extremely important for us to build a long-term business relationship with our clients. So this is a great way of us doing this with you. So let's get started with the introducing brokers, also known as IBs. So let's go down and see what are introducing brokers. So let's read it together. Introducing brokers, or IBs in short, are independent broker dealers acting as agents whose task is to introduce new traders to a brokerage firm such as IronFX. Introducing brokers earn commissions calculated from the traded volume of the traders they introduce to the brokerage firm. It's in the best interest of the introducing brokers for their clients' trades to be profitable, because the more they trade, the more revenue is generated for the IB. Then we move on to revenue and market rebates. To make their offerings more alluring, IBs often give market rebates to their clients, usually by sharing a percentage of their generated revenue with them. Market rebates are perhaps the main reason
why some traders prefer to trade with a brokerage firm through an introducing broker. Moving on, we have the IB monthly reward plan. So you have different options right here. We have silver, gold, platinum, and diamond. Let's get started with the silver. We have the ranking, and then you go to qualifying net deposits, minimum trading volume, number of new clients, and cash reward. So for silver, qualifying net deposits, $5,000, minimum trade volume, 50 lots, number of new clients, 3 to 7, and cash reward, $100. Moving to gold, it's $10,000, 150 lots, 8 to 15 new clients, and $250 cash reward. Moving to platinum, we have the $25,000, 250 lots, 16 to 25 new clients, and $500 cash reward. Then the last option is diamond. And then we have $50,000, 400 lots, 25 plus new clients, and $1,000 cash rewards. Then all you have to do is first visit our marketing hub to get your unique referral link. Get new clients to sign up via your referral link. The more referrals trade, the greater your chances of earning rewards. So what I want you guys to do if you decide to proceed with our IB program, if you don't have any experience, it's completely fine because, as I said, you have the dedicated account managers who are here to help you. And also you have our support team that you can always ask any questions you want, and they will be able to assist you throughout the whole process. Then you have more IB benefits here. You can go through it at your own time. Then also here you have why become an introducing broker with IronFX. So we have awards, IB portal, and support. You will also have marketing materials. And then here you have trading benefits for your IronFX referrals. So for example, right here you have market products, trading platforms, security, transparency, exclusive bonuses, promotions, and more. You can always contact us and be able to assist you throughout the process. Then I want us guys to move on to affiliates. So on affiliates. Just give it a second to load. So what is affiliation? Affiliation is a third-party marketing in more simple words. So you as an affiliate, you need to have an online presence. So you need to have a website or strong social media, or have, let's say, an academy of yours, and etc. So you as an affiliate, you can earn commissions from your referred traffic to us. You see, this is a different website. It's a website dedicated to affiliation. You see here how it works, payouts, affiliate marketing. You have market analysis, SEO strategy, marketing tools, you have support. Also here you have academy, blog, and about IronFX. If you scroll down, you can see here how it works as well. Why partner with us, and etc. It's super simple for you to sign up as an affiliate. It's exactly the same process of signing up as a client. As I said, if you have any questions, you can always contact our support team and we will help you through the process. Then I want us to go back. to our last option, which is white labels. So I will explain it in simple words for you guys that you don't have any experience. So white label is basically an arrangement to market and sell an already existing broker's platform as if it was your own. So if you're looking to jump into the industry, you can do that without having to start from scratch. So here we have reasons to white label. More reasons to white label. And then we have why choose the IronFX white label solution. You can benefit from robust and highly competitive trading environment based on deep institutional liquidity that will allow you to provide your clients with spreads and swaps starting from 0.0 pips and up to 1 to 1,000 leverage on over 200 tradable CFD instruments from 6 asset classes. So you have features here. You have trading account types, trading platforms, multiple accounts, customer service, leading authority, and trusted broker. So as I said, for you guys that you do want to start, you do want to jump into the industry and create your own brokerage, this would be a very nice way of doing that for you, because it's very important that you don't have to start from scratch. I understand it's very difficult to start a company brokerage. It's not like opening a store, for example, for clothes. It's different. So we will be able to assist you with that. We will help you into creating the best possible version of your vision when it comes to that. So that's it for today, guys. When it comes to our partnership programs, as I said, we as a company, we would love to have our clients as our partners. It is very important for a company to invest to their clients and to be able to build good business relationships with them. And if you go through our partnership programs, even if you don't have experience, if you have experience, that's great. You will be able to understand more about it. As I said before as well, you can always contact us by our support team. You can email them or just click over here and chat with them. So that's it for today, guys. Thank you so much for joining me once again, and can't wait to see you. Until then, be safe and have a very good day. Bye-bye.